Ladies and gentlemen, good afternoon. I am Steve, moderator for this conference call. Welcome to the conference call of Blue Cloud Softech Solutions Limited, arranged by Concept Investor Relations to discuss its Q3 and 9 months FY26 results. We have with us today Mr. Vinod Babu, Chief Executive Officer, Mr. Seshu Varda, Chief Financial Officer. At this time, all participant lines are in the listen-only mode. Later, we'll conduct a question and answer session. At that time, if you have any question, please press star and 1 on your telephone. Please note that this conference is being recorded. I would now like to hand over the floor to Mr. Vinod Babu. Thank you, and over to you, sir.
Hi, Steve. Thanks for the introduction and good afternoon all. So thanks for attending the earnings call today. I myself, Vinod Babu, here, CEO of Blue Cloud Softech Solutions. Along with me, my colleague, Mr. Chandrasekhar Mudraganam, who is the Chief Executive Officer of the company, and also Seshu Varda, who is the CFO of the company, along with me. So we are here to discuss details on the earnings and also the specific pointers which are required to be given a detailed information. So, over to you, Ash. So, any specific questions to start with or in the discussion? Thank you.
Yes, sir. Should we begin with the question and answer session?
Yeah, we are good to go. Okay. If you, unless you have anything specific you want me to explain or take this up, as a moderator, over to you. So, you can take it.
Okay, sir.
All right.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Nishi Vyas from Fino Optical. Please go ahead. Nishi, your line has been unmuted. Yeah, thank you.
Yeah. So, what is the current consolidated order book value and what is the revenue visibility for FY26 and FY27?
Yeah, this is Seshu Varda, CFO, and our order book value and estimated projected revenue for FY27 would be around 3,000 crores approximately.
For 2027?
Okay. 2027.
Yeah. So this comprises of, by and large, cybersecurity ongoing contracts that we have, and also the AI healthcare initiatives that we have initiated, especially the products and platforms that we have developed, is going to give a significant chunk of revenue contribution. So the first place, by and large, would be the safety, security, and the surveillance platform that we have. And the second, also the from the source of AI healthcare, especially from Blue Health, Blue Bio, and other areas of it. And third place would be, by and large, the telecom. So, which basically now is going to be a CNPN network that we have signed with the service providers, providing the CNPN network service providers, or could be private mobile networks, or industrial automation, or the long-term projects that we have. So, would be contributing to this size.
Okay, and what IRR and payback period is being targeted for the AI data center business?
The AI data center business would be close to about 18 to 20% would be the IRR that is expected once it takes the initial phase 1 and phase 2 rollout takes place. So close to about it takes 6 to 8 years of time, 6.8 years of time to pay back, and that's an average IRR expected with the edge AI data that we intend to deploy.
Okay, my last question would be what occupancy level and EBITDA margin assumption underpin the financial viability of data center projection?
Right. Yes.
So by FY22, the stabilized level of occupancy would be around 85%, starting from 40% from FY28 and rose to 85% of occupancy by FY32. By FY32 it will be stabilized, and an EBITDA margin from 16% to 50% of EBITDA margin, and an average it should be around 43 to 48%, consistent with the model.
Yeah, just to add a line on top of it, it's basically a staggered model deployment. It starts with 40 megawatt by 28, and 29 rollout is expected around 80 megawatt, and what about the payback that we are talking about at an 85%? That's what close to about 100 megawatt deployment is by and large planned to be achieved by FY30.
Nishi, does that answer your question?
Yes.
Okay. Thank you. The next question comes from the line of Maitri Shah with Sapphire Capital. Please go ahead.
Yeah, hello. Good afternoon. Am I audible?
Yeah, please go ahead.
Hello. Yeah, hello.
Yeah.
So I'm a bit new to the company, so if you could take a few minutes to explain how the business works, what the verticals are, and what each of the verticals we are supplying to the clients, and what sort of services are we doing in each of the verticals. Since you mentioned we are into security contracts, healthcare, and also telecom, and also discussions on AI data centers is going on. So if you could just bifurcate the company into these verticals and what sort of revenue we are getting from each of them, just an overview of this company, if that's possible.
Yeah, hi, this is Chandrasekhar, the CEO of the company. So Blue Cloud today operates primarily in four verticals. That is security, healthcare, education, and support services. And that also includes the telecom division.
Mm-hmm.
And for each one is separate, like we are operating as a separate business unit of the company, having its own development and delivery teams. And we are catering to customers pan-India and also overseas. We are also looking at overseas contracts. And coming to the revenue of each of these business units, in up till this quarter 3 of 25/6, we had 75% of the contribution from the security BU, 10% from the healthcare BU, 5% from the education BU, and 10% from the other BUs, that is support and telecom.
Yeah.
Okay.
So just to add, give a bit of insight more about it. So in the cybersecurity, by and large, we provide, we have developed first of its kind technologies like dark web monitoring system and anti-money laundering platform, as well as now a couple of our intelligence platform. So which is the core contribution, which has been now earning long-standing contracts for the company for quite some time. In AI healthcare, it is by and large the remote healthcare management, population health management, community health management platform. So which is right now being used by various clients across the world. So in India also we have done this recently with POCs with GMR, as well as other where we are going population health management.
Your voice is a bit inaudible. I can't hear you clearly.
Is it clear now?
Yeah, much better. Yes.
Yeah. So I was now emphasizing on what exactly are we doing in terms of healthcare area. So in a Blue Health, we're working both in the government and as well as enterprise sector. And then the Blue Bio is one more AI-enabled edge diagnostic centers, especially for oncopathology. So oncopathology is cancer specialized diagnostic centers with AI technologies that's being used in AI healthcare. So that's one of the promising revenue source for us as we move forward from FY26 to 27, 28. So it's going to be by and large a big contributor. And also the 5G telecom, where private 5G and also subsequently running this CNPN would be one of the areas. So this is what majorly that we focus on. Apart from the new business that we are entering into is the data center. Yeah.
So sorry if this question sounds a bit redundant, but the new business that we're entering, the data center business, are we in the management side or in the more on the hardware side of the business? Are we constructing the data center? Are we operating and managing it? What sort of business role are we going to play on this side?
By and large, we are taking a unique approach, especially in the data center side. So the whole idea of building data centers itself is, to come up with, it's time for India to have, its own sovereign data center. So this program, and Blue Cloud, we call it as in PECI, so which is what Bharat Edge Cloud Infrastructure, ECI, or Cloud Infrastructure, Edge Cloud Infrastructure data centers. So here, the model would be of, it's a hybrid model. So one is that at some places, specific requirement points, we would be building the edge data center, especially related to specific enterprise requirement or where we'd be relying upon the existing, whether it is a dark fiber networks. We'd be also signing up with this, because we already signed up with KRC. We are looking forward to sign up with a couple of organizations which are having their own dark, so which can be connected back to the data centers, provide an integrated sovereign data center infrastructure. So here, answering to the question straight point, it's not about the hardware, it's more about the management, also solution integration, end to end. So that's where the involvement also. It's not the whole investment will be going into the capital expenditure also in terms of using the resources and related solutions.
Okay. And we did mention that we're going to start with a 40 megawatt capacity in FY28, moving and growing it to 100 megawatt by FY2032. Did I hear that correct? Is that what we are planning?
Yes, that's what by and large the plan to start with initially with the 25 to 30 megahertz to the 40, and then subsequently roll out megawatts, and from there we rolled out to 80 megawatt, and there it will be rolled out to 100 megawatt. So staggered and stepwise, phase-wise rollout model that we have discussed, and we have the technology partners who are joined with us.
So for this, the capacity that we are mentioning here, is it the capacity that we are going to just manage, or is this the capacity we're going to build out infrastructure-wise as well? Or it's both inclusive?
It includes both. Includes both,
okay.
Like building and managing. So there are certain cases where, let's say, there are the sovereign data centers which have been built, and let's say the upgradation needs to be, need to be there, in terms of technology upgradation, or also the edge connectivity, and bringing in, the specific AI-related technology onboarding with the sovereign data center. So that's where capex will be coming in. So at some point in time, it could be just laid on the opex, and it could be just the management of the facility.
What sort of capex are we putting in for these data centers? Any number that you've mentioned?
You will say that the overall data centers phase one it would be approximately for 100 to 120 megawatts. So it's estimated cost of about $10 million, which would be the overall capex cost. It would be incurred.
Estimated cost of $10 to $15 million.
Sorry, come again, please.
The estimated cost of, I couldn't hear the figure.
$350 million.
$350 million, okay.
That's right.
And we'll be funding this through debt, equity. How are we going to fund this project going ahead?
Yeah. So it will be by and large composition of different types. So one is that it will be the external investors and family offices who has given a soft commitment before actually when we designed this plan. So basically what we have done is, so our plan is to now roll this as initially as an internal process, but subsequently roll this as a separate SPV so that the investors can join into this particular business model. So it could be the external investors who has given a commitment close to about 60% of any time. So whatever the large size project that we have projected, so for this investment would be coming close to about 60% of the from the external investors. Out of this, we are talking about this $250 million, especially in the phase 4. And Blue Cloud will be contributing from its internal accruals or maybe the FCCB proceeds that we will be getting. So close to about 20% of the bond is being budgeted for that. And the senior at an SPV level, there could be the individuals could be debt from various sources, be close to about. And also part of equity dilution that might come up, especially in the SPV, not in the parent company or the listed company. So there will be an equity dilution that will happen in the SPV. So that's where basically the fund houses have given the commitment for to infuse funds.
Yeah. Secondly, you mentioned that 3,000 crore figure. Was that the order book amount, or is that what we are quoting for next year in terms of revenue?
This is for FY27.
That is the revenue for FY27.
Yes, correct.
Okay, and so since you've divided the verticals into 4 sections, security being the highest contributor, how do you see healthcare and this telecom division kind of growing and taking on a much larger contribution share? Because I expect the healthcare division to have a much higher margins than the security side.
That's correct. Yeah, go ahead. Yeah, so we are expecting, because we have already done several proof of concepts with government and large private hospital chains and all across the country. So we are moving into the stage of actually like large projects. So significantly, the healthcare division will definitely contribute more in the coming months and quarters.
Mm-hmm. And
we are seeing a lot of traction coming up.
Sure. Any sort of bifurcation you can give on the margin side, like which vertical contributes what amount of EBITDA margins, and is there a metric that you can specify for that?
So by and large, the security tools and solutions that we are providing and which we have taken the AI flavor and advancements that we are taking in right now, the latest version. With that, that's going to be one of the biggest contributor of the market it would come up with, and then healthcare would be the second equivalent, almost equivalent to the security that we have. Whereas IT support services or telecom would be the medium level margin. So, expecting for the future business.
Okay. And this new data center business, you've mentioned that we are increasing occupancy levels from 40% to 85%. Any sort of margin expectations we have on here? Or how do you see the margin scaling up over the years?
You mean to say how exactly the margins would be in the data center?
With increase in occupancy, we'll have an operational leverage kicking in. So what do you see the margins going on from maybe FY28 to the FY30, 32 year?
By and large, yeah, go ahead,
So by and large, from FY28, if we take a 40% occupancy ratio and we are estimating an EBITDA margin of 16%, approximately. So and if we increase the thing, see, being the costs are constant and there is not going to be increase in other costs, though the occupancy increased from 40% to 55%, the EBITDA margin will grow. Definitely, it will grow because of,
yeah. One rider would be, we have seen in last 6 to 8 months what's happening with the chipset market across the globally, right? So there's a lot, there's kind of surge that has created. So where the availability, because of the non-availability of chipsets and that, IT hardware infrastructure has taken a hit off. Because of that, if the cost increases, probably the margin might be created, but it is subjected to the influential factors. But by and large, whatever the margins the ratio has presented now as of the current situation, whatever the calculations that we have made, what is
the current projections are based on the current market situation. Correct. The volatility has not been taken into these projections perfectly. Okay. And as Vinod said, if the chipset market or any other market volatility happens, this may undergo this way or that way. In either way, there may be an impact from plus 10% to minus 10%, whatever it is. So at a 55% occupancy, we have projected a 40 to 42% of EBITDA, and at 70% it should be 46%, and at 80%, 49 and 50% EBITDA range. Provided if we implement that 80 megawatt and 100 megawatt as we planned.
Okay.
In
Okay, that is great. Yeah, that is it from my side. If I'll have any other questions, I'll join back. Thank you.
Right. Thank you.
Thank you.
Thank you. The next question comes from the line of Abhijit Periwal from Softech Securities. Please go ahead.
Hello. First of all, very congratulations on the good sort of numbers and also on the doing Concall for first time. My question would be on the margin side only. So if you look at the profit margins this year, we have seen a significant jump this year also in 9M. But also we have to consider that the AI and cyber security is getting much more crowded and more competitive, and we also moving into clean energy. So how do you plan to keep this high margins going further, high growth in these margins, and also can you throw some light on the margins for next 2 to 3 years?
The multiple ways that we have taken this approach. This is why, by and large, the model that we have chosen is instead of more focusing the business on the tier 1. So that's where when we wanted to have spread across to tier 2 and tier 3 cities, especially with the data centers, actually costly in terms of when they go for a tier 1 data centers like AWS or GCP or any other data center. So the affordability wise, we wanted to bring that to the volumes in our tier 2 and tier 3. So that's where now one area where now we are going to have the early bird advantage when we roll out this edge data centers or the container business. So that's one of the areas where we can actually secure the customer and the margins would stable. And second would be the kind of a SaaS models that we are going to come up, especially with the AI platforms, where we are bundling the solution along with the storage and multiple services to be given across. It's not just a storage. So right now, you wanted to have a cloud solution. Either you go for a compute or go for a specific storage requirement or specific application requirement. But we are going to come up with a solution where we're going to bundle this entire together. So that what happens is the cost remains to be, it becomes one capex which would be shared across multiple tenants. And that's where the cost advantage is okay. And we could maintain the profit as projected plus minus again, be a percentage of 10 to 15% with the changes. But by and large, we can maintain that.
Okay. So, which are the clients that we recently onboarded? Can you share some like data about it?
So there's specific clients, we have kind of. You mean to say pertaining to a specific sector, or you're
asking about the data centers?
Now, data center is still haven't grounded yet, right? So it's just the starting stage. So what we have done is initially we are taking an approach, as I told earlier to initially answering to our questions. So we are looking at 2-3 models where the existing data center may be the PSU-based data centers, maybe a small scale data centers wanted to scale it. We are right now at a verge of planning so that their existing customer base will be rolled out. And where, in fact, we can add the edge AI or AI-related hardware and upgrade the technology with the 5G network solutions so that the speed could be improved within that. So that is where now basically the existing clients of the current data center providers would be added into the system. That's a model that we have, especially in the data center. Instead of building something right from scratch. So we wanted to actually identify the small and medium-sized players, identify the small and medium-sized players, and we started working with them, and which by and large would have more clarity on the data center side of it in next quarter.
Can you share me maybe a timeline in terms of years in this data center, so we can look when the major capex is required and all.
So data center, the first phase would start in 20. In words, FY28, the first data center of 50 megawatt is expected to be rolled out. So by and large, the question pertaining to the question that you asked, when is this fund requirement would be right from the next quarter onwards. So it starts from next quarter onwards because we are starting from now. It's not just building the data center right from scratch. It is building the data center right from the scratch, because in this particular business, what we have done is, if you observe recently, we have made an announcement about related an acquisition of a company called Global Impact.
Yeah, right.
So, right. So this company is already having established in India as well as US. So this particular company is into automobile and clean energy and renewable energy sector. And this company is also having close to about 100 acres plus land at a prime location, where there is a proposed, couple of landing sites are also expected there. Gateway points are there. So that's where we have 100 plus acres of the land. So this is how basically our journey of data center starts. So it's this acquisition going to be able to in terms of starting the data center. So typically, as we are doing a share swap, and with which basically we are acquiring this company. So that's an investment which already is being started from the cloud, in fact. So now share swap. And second is that once we have the land, the construction is expected to be started FY27 onwards. That's where the real requirement in terms of capex will be required.
Okay. So on the Global Impact acquisition, on that front, the press release is light on the number side. So can you give me some colors on the valuation of this company, and also I want to understand what are the aspects that you expect, and what are kind of margins and revenue contribution you expect in going forward.
Okay, you are asking about the numbers at which basically. Can you be a little more clear on the question, please? If you don't mind.
So I had just two questions. The first was on the valuation side. Second, what are the asset turnovers that we expect?
Yeah, these two would be shortly announced. The valuation process is ongoing. A board meeting was commenced and to go ahead with this acquisition. So post of that board meeting, we initiated the valuation process right now. It is undergoing the valuation process, and shortly within very short time, you'll be finding an announcement, a schedule of the dates, and what exactly going to be the valuation and other details of particular company's top line.
And model of the acquisition.
Yeah.
Oh, all right. So, sir, last question. Is there any pressures on the working capital, especially in terms of receivables or payment from customers that we have seen in FY25? Our working capital significantly increased. So, this quarter is any pressures on that working capital or something?
So this quarter would give us, yes, last quarter we had a little bit of pressure in terms of working capital, and this quarter significantly it will reduce from the last quarter. Because there are multiple things because of the the various geopolitical situations also. Now there were payment delays that have happened because most of the clients sources to which basically business is happening is government bodies in various countries, which are dependent upon US as well. So that was something where the payment delays have in terms of the government payments and all. So the realization took time, but it haven't created enough impactfulness. But yes, there's slight pressure on working capital. But this quarter it will be much better than quarter, and as we move forward, we expect things to be much stabilized.
Subsequent to closure of the quarter, received a majority of the receivables, and the working capital pressure is now eased. If we see as on date, we are in a comfortable position, and the receivables have started getting back. But now again, for this March, because of this new geopolitical situations, we need to see. But we are hoping for a better working capital cycle this quarter.
Because they are all interdependent. Because we are serving to an X client. That X client is again serving to, could be a Y client who's related to one of the government agencies, where the payments might be, little.
That's from my side. Thank you.
Yeah, sure.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. The next question comes from the line of Harsh Vora from My Temple Capital. Please go ahead.
Hello, sir. Am I audible?
Yeah. Yes, sir.
Thank you for this opportunity. So my question is regarding the exclusive India license for Clean Labs technology. So how long are these agreements valid? And should we be modeling in any ongoing royalty back to Connect?
Harsh, which technology you suggested? I think there was a voice. We missed your context.
Okay, so regarding the exclusive India license for Clean Labs technology, so how long are these agreements valid for?
Clean energy.
Clean Labs technology. So you have this exclusive India license for Clean Labs technology, right?
Clean Labs. No.
Okay, we'll come back to you in this question.
Contract.
We need to check the context of the question that what you have asked. We will reply to subsequent to closure of this call.
Yeah.
Okay, and I have one more question. So, it's interesting that to see you moving into blue energy. So, how does a clean energy platform actually synergize with your existing digital health and AI diagnostic business?
Okay. So, how exactly the clean energy model is going to align, synergize with the existing business model? Is what the question, right?
Sure. Yeah, right.
A very good question, Harsh. I appreciate that. So, right. And by and large, see the clean energy. Why? If you look at it, when we actually started this, initially we focused on. So we have developed the AI-related platforms initially. So we have been an early bird in terms of understanding the technology. Now the wave of AI is going to come up. So that's where in 2020 onwards, we started actually working, which got subsequently merged into Blue Cloud IT Corp. So where we started at early days, the AI development for our existing tech. So that's where our journey of AI started, especially in the emerging technology. So then we also understood over a period of time it's very important to have your own sovereign hardware support and ability also over here. So that's where now we thought of getting into semiconductor, especially the edge AI. We're not getting into every part of semiconductor. That's the one. So then we got into the semiconductor, where we wanted to have indigenously developed edge AI chip that could be used for the edge computers, especially from IoT, could be on a surveillance side or could be on a security side. And then we wanted to actually focus on along with that. So to enter to offer our solutions at a tier 2 and tier 3. So we entered into a telecom space. That's where we have signed up with the telecom providers in terms of extending their spectrum and running the 5G FWA services. So that the whole idea is our solutions and products can be brought and could be made reach the tier. So that's the plus behind that. And as we move forward, we also see that, especially the whole idea to build, micro edge data centers, data centers, especially in India, which is going to be sovereign data. We need to the biggest requirement of clean energy. So energy is a vital going to be the so that's where the blue energy as going to form as a part of it, and which will be dealing with the cleaner and renewables. So that's where Connectem's position also. I hope you understand the connectivity now.
Yes.
This is my given the entire dots. Please.
Yeah. But thank you. That's it from my side.
Thank you. The next question comes from the line of Rakesh Jain with Soul Capital. Please go ahead.
Yeah, hi, good evening, sir. Thank you for the good set of numbers and the opportunity accorded to us. My question is, could you please elaborate on the timeline and the flow of the data center business? What you expect from here onwards till FY32? So, is it possible to give us on an annualized basis the megawatt expansion expected and the top line for each particular year?
Mr. Rajesh, we have already explained this question. At the cost of repetition, if you want me to explain once again, okay, I'm prepared to do. But it is already recorded. The same question and answer is already recorded.
But yeah, you can.
But yeah, I can give you the nitty-gritties of the details. FY28 we are going to roll out 40 megawatt with 40% occupancy. FY29 we are going to roll out 80 megawatt with 55% occupancy. And FY30 full 100 megawatt going to be deployed with the 70% occupancy. And the same would be rise to 80% by FY31 and 85% where the occupancy will be stabilized by FY32 with an assumption of 80 to 85% of range stabilization there after full deployment of 100 megawatts by FY32. This is the stage-wise deployment and occupancy ratio assumed to implement the data center project.
Okay. Sir, may I, again, I know you have answered this earlier, but maybe I was not clear. Could you elaborate the capex required for this particular expansion? What would be required for the next 4 years?
The capex required
here is about 3.5 million per megawatt. And for 100 megawatts, we are looking about 350 million.
Okay.
This is phase 1.
Okay.
$50 million US. Yeah.
$350 million US.
Okay. So that is till FY32 phase 1, max 100 million, about $350 million expansion plan.
Yes.
Yes. Yes.
Okay. Okay, sir. Thank you so much.
Thank you. Sure.
Thank you. Participants, if you wish to ask a question to the management, you may press star and 1. The next question comes from the line of Rakesh Jain with Soul Capital. Please go ahead.
Yes, sir. Thank you once again. May I know the year-wise revenue projections for 28, 29, 30, 32? This is this the
the FY27 projections would be around 3,000 crores. FY27, and from there onwards it would be around 25 to 30% year-on-year.
So consolidated.
At a consolidated level.
So there's a growth of 30% year-on-year from 27 onwards. So
yeah,
okay, on a consolidated level. Yeah.
Correct. With the implementation of data centers and full rollout of 5G FWA, this will take place, and further on the projects on hand, which we are already implementing and doing,
including all the verticals, part of it.
Part of it. This is at a consolidated level. This is at a consolidated.
Thank you, sir. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Vinod Babu for closing comments.
Thank you very much, team, for scheduling this earnings call. And we are very much delighted to back with you all of CEO and CFO. So I hope questions are being answered. Queries that have been raised. And by and large, we look forward, bright future and business that we have forward at this point. Especially, looking at recent, initiatives by the government of India, as well as, especially for the data center side and AI side. So we look forward for the same kind of a support from all the investors and shareholders for trusting and believing in us, and we strive to improve and make it much better as forward and strong. Thank you.
Thank you. On behalf of Concept Investor Relations, that concludes this conference. If you have any further questions, please send an email to gaurav.g@conceptpr.com. Thank you for joining us. You may now disconnect your lines. Thank you.
Thank you.
Thank you. Thank you.